traders, and welcome to some market insights with yours truly, Richard, serving traders responsibly here with Orbex. Today is the 24th of January. It is 9:32 a.m. Eastern European Standard Time, and there are some market movers that we need to take a look at in a sense that there's an important event happening. The most important event that we're going to talk about is the ECB interest rates decision, and obviously the press conference with President Draghi of the ECB. But let's basically take it from the top. Today, the market movers in focus would be the Australian dollar employment change. Then we're gonna discuss about the ECB press conference, and we're gonna translate everything in all these onto the charts, right? And following that, the crude oil inventories. So we're gonna focus on a few assets, let's say. But first, let me just jump on the dollar index on the 2 hour time frame just to show you guys something that I'm actually looking at. This could be a potential bear flag in a sense that it could resemble a wave 2 after this after this correction completed. Let's say, for instance, so the way I'm labeling the drop of the dollar index, which started on back in 14th December 2018, in an A B running flat in this minor B red, and then the C leg with a 5 wave sequence. Thus, this could lead towards more downside. However, it's not really confirmed totally, I mean, yet. But the way it rose, it does look corrective, has corrective, features, and has a corrective sequence inside it. And I would not be surprised because as you can actually see here, this rising channel has been potentially broken, and this could lead towards more downside for this, right? So jumping on the Australian dollar, and for us to actually translate the effect of the employment change, right? As you can actually see, it was less than forecast by 6.3 K, which obviously led towards a softer Australian dollar. However, the unemployment rate did increase. Okay, and let's just go back on the AUD USD on the 2 hour time frame, and the rise that actually started back on the 2nd of January. I'm labeling it as a potential leading diagonal in wave 1 minute green, following by a complex correction, a double free in this WX, and then AB, and this would or could be the last sequence for this C leg in an impulsive manner, in a 5 wave sequence with this small C wave, right? And as you can notice, the 100% Fibonacci extensions from A to B, to thus determining the possible end of C and the Y and the 2 minute 2 green could hit the 100% and aligning with the 38.2. However, if this would be extended in the C leg, 161.8 would be the next levels, which are the default measurements for a wave 2 retracement. So we'll see basically if this would be limited or not. It will be if it would be more impulsive. So the outlook, for instance, this kind of looks corrective, inverted to the dollar index. That's hence the reason why I started this with the dollar index, right? So let's talk about the ECB a little bit with the press conference, okay, with President Draghi having his speech. Now, analysts, fundamental analysts for this economic indicator and this press conference are expecting the deposit facility rate to remain the same at minus 0.4%, and let's say more of a dovish speech from President Draghi. Okay, however, that would be for the short term. However, for the long term, let's say perspective, euro is actually sitting at located at a crucial point, right? In a sense that it needs to make a decision. And today we could see some big volatility on the euro USD. As you can actually notice, I'm on the euro dollar on the daily time frame right now. And the way I'm labeling the euro dollar, just to make it quick, I'm labeling it in a 5 wave sequence, 1, 2, and then the extension in wave 3. intermediate free blue, and then a running contracting triangle in this wave 4 intermediate, followed by the last squeeze, thus most probably ending primary A red. And then the correction actually started with this view right here for the upside. So we have free moves on the upside and then a double free, which I'm labeling it in a similar contracting triangle such as this, right? In this wave X in a double free WX and then A B C D E right here, and then gaining support, right? So as long as this support holds, there's still hope for the euro dollar to possibly break out of this descending channel and this corrective sequence to possibly head on the upside for a last C leg, minor C, thus determining basically, thus possibly ending a WXY structure in an expanding flat sequence and structure, thus, probably ending a primary B sequence and a larger degree corrections. So let's just zoom in to the 2-hour time frame and see how this sequence would actually pan out. The way I'm labeling it, of course, after the X wave finalized the intermediate turquoise X, I'm labeling it with a rise in A and then an expanding flat in this minor B blue, followed by what could be an impulse in the C wave, the minor C right there. And what this needs to do would be to gain support right here for the upside. However, considering the fact that this fundamental event, this economic indicator, the deposit facility rate, sorry, and the ECB press conference um, could affect, okay, most probably would affect the euro dollar's direction. It is kind of delicate, let's say, to accurately predict what's about to happen. However, on the smaller time frames, right, what we could notice is that this correction, the way I'm labeling it, is in an A, B, C with an ending diagonal in the last fifth leg of the C. Thus, possibly it could have just reached this bottom. However, right, we could notice a possible breakout. Okay, and what appears to be after that a possible corrective structure which could lead for more upside for the euro USD. Okay, so today, I believe that the euro dollar will be closely watched by traders and with much interest for the next dominant trend and the actual trend of this month and February's month. Okay. Now, the last economic indicator we're going to cover is basically the crude oil inventories, and as you can actually see, the forecast is for a rise, let's say, right? From minus 2.6 million to minus 2.1, which could be good for the, let's say, for instance, for the WTI West Texas Intermediate. I'm on the 4-hour chart on the crude oil, and the way I'm seeing things is basically, let's say, for instance, after it reached this bottom, and I covered this yesterday in yesterday's Market Insights video. I'm labeling an impulse, minor 1, 2, and then the minute 1, which could lead right here. So minute 1 has a 5-wave sequence, right, followed by a divergence right here, bearish divergence, and this corrective structure, in my personal opinion, wouldn't be enough, right? So I'm suspecting a possible drop towards the 50%, 61.8, but it has to look corrective, okay, in this sequence, regardless if the structure is complex or not, as a simple ABC move or WXY in a double free or something like that. Okay, under no circumstance a triangle should take place in this wave 2 position, but we'll basically um, we'll basically see more details once this price action continues unfolding, and more details could be revealed in regards to the actual sequence behind this structure. So just giving you a heads up here, guys, maybe we could have more downside, but the outlook still remains bullish for after following obviously the epic sell-off in the crude oil, right? So yeah, it could lead towards more upside. That's it for today. Until next time, as I like to say to all my traders, stay in the green and many pips ahead.